Hello, welcome to Business Incorporated, live on Channels Television. Coming up, remittances from Egyptians abroad rise to $26.4 billion. Botswana set to present virtual asset bill to Parliament, make them the first in Africa. Rate hikes loom in Africa, with South Africa Reserve Bank expected to raise repo rates. Thank you for joining us. I'm Ladi Williams. First off, let's take a look at the markets now. We see trading on the African continent kicked off the week in a negative sentiment observed at intraday. We see Nigeria's main index traded flat, while South Africa's benchmark index fell by almost 2% at intraday. Elsewhere, Egypt's index also dipped 0.28%, while the Nairobi Stock Exchange closed Friday's session marginally up by 0.05%. Over to the Middle East, where sentiments were mostly negative. Also at intraday, people at the Abu Dhabi and Dubai markets saw both indexes trading lower. At intraday, the Abu Dhabi index fell 0.21%, while Dubai's index dropped by 1.68%. Still within the region, Saudi Arabia's index fell 0.40% at intraday, while the Qatari index was the lone gainer as it rose by 0.28%. And it's a reckoning for German economic losses in the pandemic. We see a new German study calculates more than a third of €1 trillion in lost value creation over the past 2 years of the pandemic. The German Economic Institute in Cologne calculates the Europe's largest economy lost €270 billion in consumer activity and €60 billion in business investment. That's never happened. Let's get more now from Stephen Bursley, right there in Berlin. Great to have you, Stephen. So, €350 billion in lost spending. Essentially, put this into perspective for us.
Sure, Europe's largest economy has an annual output of around €3.5 trillion. So if you look at this, that's about 10% lost through Corona over 2 years, 10% of GDP. That's significant. And that's people not going out to movies, not buying big ticket items, not going to restaurants like they once did. That's also businesses holding back on their investment because they need to have that cash on hand. Now, if you look at the study, it says that €200 billion in output was lost in 2020 and in 2021, slightly less at €150 billion. Now, the German government has made up for some of that by increasing its own spending, especially in recent years. But really, this has been a question about when the private sector in Germany is going to get going again, as it has been a question for economies around the world, only to run into wave after wave of new coronaviruses or new corona variants. Remember, in 2020, as everything first really kicked off, there was a complete screeching halt to a lot of economic activity here. Employers were staying home either because they were sent home or because they had to take care of kids. Their kids may have been at home. And many of them stopped spending, frankly, because they weren't sure what to make of what was going on, and they weren't sure what was going to happen with their income. Now, if you look at the industrial side, by later that fall, things had really picked up again, and it started to really get its groove back until suddenly supply issues really began to crop up in the next year in 2021. The German auto industry is a perfect example of that. It's a major employer. It's seen incredible sort of putbacks in its production because of its supply issues, especially in the area of chips. And so that's been a huge impact on the German economy. On the services side, we saw that this past summer, the output, economic output, was finally comparable to a pre-pandemic time. But then we had 2 consecutive waves of the virus come through. First, that Delta variant in the fall, leading into early winter, and right now, the Omicron variant. So in each case, you have an economy that's trying to get back on its feet again, only to have the newest variant come at it.
All right, Stephen, but what kind of toll is this taking on workers and businesses?
I think that's really the story here, is that despite this massive loss of economic output, you've seen a German state that has really been able to provide a major cushion for both employers and businesses, and that's mostly because of borrowing. Over the past 2 years, it's been able to borrow €370 billion and that's enabled it to fund such programs as worker insurance, which has allowed workers to remain at their businesses even if the businesses otherwise have no need for them. So you don't see the job losses here that you would see in places like the U.S., for example, because those workers are still being paid. You also see, for example, grants and loans going to businesses to help them deal with that loss of income. And then we've also seen things like a reduction in taxes. So all of that costs money. The German state has been able to afford it like maybe few other nations can, but that's not, of course, frictionless. That, of course, means taking on new borrowing, taking on new debt that has to be paid back. And here in Germany, there is a real tendency to want to pay down debt levels as soon as they come up again. So that could mean new taxes coming in the years ahead. And this debt also comes at a time when there are many other big ticket items on the list for the German government. That includes climate priorities, and that includes priorities in digitalization, expanding broadband, for example, across the nation. And so the question is, how is all of that going to fit together? And that's really the political discussion that's going on at the moment.
Right, and the pandemic, is it yet over? How bad could things get?
Of course, and that's the big question as well, is where do we go from now? There is a bit more optimism here as elsewhere because Omicron seems to be potentially a path into an endemic relationship with this virus. And of course, the illness itself seems to be milder. At the same time, what businesses are seeing is they're facing the potential loss of many employees all at once. That could be further challenges to them. And then, of course, the supply shocks that could come down the road, especially as this virus makes its way to China, for example, a major production site for Germany, as well as many other nations. What are the ripple effects going to be across economies? This study that we've been talking about, it's also foreseen if Omicron hits as hard as it thinks it will, then it could be another 50 billion euros loss in the first quarter of 2022 of economic output. So the losses are mounting, and the question is when they're going to finally start going back and economies really are going to find their footing once again.
Well, that's the big question. All right, thank you so much, Stephen Beardsley, right there in Berlin. Moving on now to the UK. We see Eurozone's recovery weekend again this month, and it's no different in the UK. Let's hear more now from Juliana right there. Great to have you, Juliana. Well, data from IHS Markit shows British business activity cooled to an 11-month low in January. I guess we're seeing more new lows in the UK.
Yeah, not great. The composite PMI, Laddie, has come in at 53.4. This has fallen from 53.6 in the month before, and it's really consumer-facing businesses, so it's really had an impact on leisure and travel, as well as hospitality and manufacturing. This is all down to Plan B measures. We're now looking in the rear view because, of course, we know that the vast majority of Plan B restrictions have been lifted, and the ones that haven't been lifted will be lifted on Thursday. But because millions of people were working from home, this caused a huge issue for the hospitality sector. They were really hoping that they would be able to reap back the benefits and the rewards from the year in December, which was really a busy month. They weren't able to do so. But then, because over Christmas and New Year we had a spark in cases, this has led to this pretty abysmal composite PMI data. However, it still is above 50. And it's important to know that 50, of course, anything above that does show some sort of expansion, but it's not as good as market analysts had expected.
Yeah, still above 50. That's reasonable. But I see a British banknote printer, Delarue, has issued a profit warning after suffering supply chain shortages and staff absences due to the pandemic. Tell us more about this.
Yeah, it's been a pretty tumultuous few years for Delarue. As you said, they are most notable for printing polymer banknotes, formerly paper banknotes. Even before COVID, they had a huge issue because they pretty controversially lost the contract to print post-Brexit British passports. And the irony is that the British government gave it to a Franco-Dutch firm. So they lost hundreds of jobs, and they have been trying to attain some of that elitist status that they had prior to losing this contract. They haven't been able to do so. They've issued a statement to investors this morning saying that operating profits will be £11 million below what had been expected. This sent their share price down by about 30%. So they've completely lost so much of their value this morning. And there are so many different issues for them. Omicron again is at the top of the pile. This has affected staff sickness, not just in Britain, but also at some of their sites in Sri Lanka and Malta. Supply shortages, a big issue for them. A lot of these new passports do actually rely on these semiconductor chips that are missing. This has impacted their contract in Australia to create passports for them. And also inflation. Inflation is running at a 30-year high in the UK. It's costing a lot more to get your hands on these much needed items to create your produce. And so, yes, you know, this their tale is a tale of many businesses up and down the UK, which is why there was such a swift sell-off at the start of trade.
Yeah, it was. I see markets were rattled earlier today. How's it looking at intraday?
Not great, triple-digit losses on the market today. This is predominantly down to house builders, actually, in that PMI data. Lots of suggestions that the Bank of England will indeed raise interest rates again when they meet for their monetary policy meeting sometime next month. Lots of house builders who've been doing exceptionally well are running scared, so they really dragged down the FTSE. But then again, I was speaking to Innie on Business Morning earlier today about the Ukraine-Russia conflict. This is now starting to spook the markets. Crisis talks between US and Russian diplomats seem to have stalled or fallen over the weekend, which means that gas prices, which are already at record highs, could be exacerbated even further. So that sent the markets down. So at intraday, the all share is down 1.58%. The FTSE 100 is down by 1.35%. The FTSE 250 is down by 2.75%. In the currencies market, the British pound is down on the US dollar by 0.35%, down on the euro by 0.14%, and also down on the Japanese yen at intraday by 0.34%.
Well, not a fun time to be a trader right now, Juliana. Thank you so much, Juliana. Enjoy the rest of your day.
Thanks, Laddie.
All right, now let's look at what's happening in Asia there. See, Asia-Pacific markets traded mixed as investors look ahead to the U.S. Federal Reserve's monetary policy meeting this week. Japan's Nikkei 225 raised earlier losses and rose 0.24% to 27,588 points. On the Topix index, advanced 0.14% to 1,929 points. In South Korea, the Kospi fell 1.49% to 2,792, while Hong Kong Hang Seng index dropped 1.24% to 24,656 points. Chinese mainland shares reversed earlier losses. Shanghai Composite was flat around 3,524, and the Shenzhen component added 0.37% to 14,081 points. In Australia, the ASX 200 fell 0.51% to 7,139. The energy, materials, and financial sub-indexes were down 0.53%, 1.5%, and 0.59%, respectively, as major banks, miners, and all stocks sold off. See, Commonwealth Bank shares, however, ticked higher, up 0.07%. And stock futures declined today following the S&P 500's worst week since March 2020 as investors await more corporate earnings results and key policy decision from the Federal Reserve. Futures on the Dow Jones Industrial Average edged down 79 points to 0.30%. S&P 500 futures declined 0.42%, and the Nasdaq 100 futures declined 0.69%. All three major indexes had been higher earlier in the session. The early Monday action followed a brutal week on Wall Street in the face of mixed company earnings and worries about rising interest rates. The S&P 500 lost 5.7% last week and closed below its 200-day moving average, a key technical level for the first time since June 2020. The blue chip Dow fell 4.6% for its worst week since October 2020. Meanwhile, bond yields have surged in the new year in anticipation of Fed rate hikes, which partly triggered the drastic sell-off in growth-oriented tech shares. While the 10-year Treasury yield finished last week lower, around 1.76%, the benchmark rate has jumped about a quarter of a percentage point in 2022. All right, we'll take a break now. When we come back, we'll get more stories on the African continent. That's in a moment. Just stay with us. Welcome back. You're watching Business Incorporated live on Channels Television. South Africa's Reserve Bank is expected to raise interest rates to 4% at its Monetary Policy Committee meeting later this week as part of ongoing hiking cycle. Central Bank is set to add 25 basis points to the repo rate after it increased it in the last MPC in November, taking it to 3.75%. Forecasts show further hikes of 25 basis points in every quarter from now until the second quarter of 2023. Central Bank had not raised interest rates in the height of the COVID-19 pandemic for 6 consecutive meetings, and with the country's inflation edging higher, the SARB's interest rate normalization process will continue. And we'll see now we head on to our first conversation there with Matt Kindiger. It's all about inflation right now in the UK. Matt, great to have you, Matt.
Hi, thanks very much for having me on the show.
Yes, and we see Africa is not insulated from this inflation issue. Looking at South Africa right now, what do you think is stoking this inflation rate?
Yeah, certainly. So South Africa has seen inflation rise to a multi-year high in December. So the inflation rate rose to 5.9% at the end of last month. This is the highest rate since at least March 2017, so it's quite a significant jump. And it's also at the upper bounds of the South African Reserve Bank's limit or target limit, which is 6%. So South Africa has seen obviously a sharp increase in inflation. This has really been driven by an increase in domestic fuel prices, which has in turn been caused by higher global fuel prices. As we know, oil prices have risen quite significantly over the last 6 months or so. But there's also been quite a protracted, a chronic problem when it comes to shipping costs. And this has driven up the cost of imported products. So South Africa has a very open economy. It's a large consumer of imports. And the rise in global shipping costs has driven up the price of companies importing products into the market. So this certainly is contributing to much higher inflation in South Africa.
Right, and what is the outlook for inflation over the coming year?
Certainly, we would expect inflation to rise over the next few months before it begins to fall towards the end of the year. So there are a few things that will contribute to rising inflation in South Africa. That includes very elevated global commodity prices. Oil and non-oil commodities will remain elevated in our view until at least the end of the first half of this year. But additionally, from a domestic perspective, Eskom, the electricity producer, the electricity utility in South Africa, is proposing a 20% price increase through 2023 for its energy tariffs. We probably won't see a 20% increase. It'll probably get something between 10 and 15%. But in any event, it will raise the cost of doing business and raise cost pressures in South Africa. So there are upward pressures on prices in the country, but there are a few things that will contain the rate of price increases. So although price pressures are rising in South Africa, a few things are in South Africa's favor. So the rand will be very stable over the course of this year, which will curtail the rise in imported products. And we are also seeing very strong agriculture production, which is containing food price inflation. Additionally, as you mentioned in the introduction, the South African Reserve Bank has scope to raise the interest rate. So if inflation does begin to accelerate, the Reserve Bank certainly will increase interest rates. So we don't see inflation rising very rapidly, especially after the first half of the year.
And how would businesses be, impacted by this rising inflation?
Certainly. So companies, at least in the short term, as inflation rises in South Africa, do face a bit of a dilemma. We have seen quite a sharp increase in the producer price index in South Africa. So producer prices in South Africa have risen by 10% year on year in December. Now, this is the fastest rate since at least March 2013, so quite a significant increase. But we are seeing companies struggle to pass this price increase on to their customers. And this is because aggregate demand in South Africa is quite weak, so demand dynamics across industries are quite subdued. And the market is also very saturated, so there's lots of competitive pressure. So in an environment where consumption and demand is quite weak, but there's lots of competition, price increases are very difficult to justify. So companies in South Africa over the next couple of months, well, for much of 2022, will need to decide between protecting their margins or raising prices in line with inflation. So a bit of a balancing act over the next 3, 6, 12 months.
Yeah, quite a balancing act. But all fingers, points to a rate hike. How do you see these hikes now impacting Southern African markets?
Yeah, certainly. So I think it's quite clear that the Reserve Bank will increase interest rates probably, at the next meeting, but possibly, we will see a few extra hikes over the next couple of months. The impact will really depend on the pace of the hikes, the rate, how fast they increase as well. In South Africa, the country is quite well positioned for a couple of interest rate hikes. But if we do see aggressive interest rate increases over the next 6 months, this could really negatively affect South Africa's economic recovery. And this is because the country is in quite a fragile position in terms of its growth outlook. We're not forecasting growth of more than about 1 or 2% in 2022. So the South African Reserve Bank really does need to decide whether it wants to curtail inflation or support the country's growth outlook, which is quite muted. So again, yeah, a bit of a tough decision there.
Quite a tough decision for them to make. That was Matt Kindiger right there, practice leader, Sub-Saharan Africa in front of you. Thank you so much.
Thanks very much.
All right, now, moving on. Now, see, remittances from Egyptians working abroad during the first 10 months of 2021 reached about 26.4 billion US, an increase of about $1.9 billion by 7.8% compared to the same period of 2020. From July to October 2021, it achieved an increase of 0.7% on an annual basis to about $10.45 billion compared to about $10.37 billion during 2020. According to the Central Bank of Egypt, the preliminary data during October 2021 showed a decline in remittances from Egyptians working abroad slightly by 1.7% to reach about $2.30 billion compared to about $2.34 billion during October 2020. Egyptian expatriates send back billions of dollars a year in remittances, an important source of hard currency. And the Botswana government is set to present a virtual asset bill to the country's parliament, a move that could see it become one of the first countries in Africa to have laws regulating cryptocurrencies. Botswana government draft document that proposes to regulate new and developing virtual asset businesses, as well as provide a regulatory body with its function and powers, is now set to be presented before the country's lawmakers in a recent government gazette. A planned presentation of the virtual asset bill, alongside other bills such as the Financial Intelligence Bill, comes just over 2 months. The country's central bank warned residents engaged in cryptocurrency trading that Botswana does not have a regulatory framework to govern such trading. Yet in the draft that was published in the Extraordinary Government Gazette, Botswana authorities suggest they are not only seeking to recognize crypto trade, but to plan to include provisions for managing, mitigating, and preventing money laundering and financing of terrorism into the proposed law. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Enjoy the rest of your day.